What is up, everybody? Welcome back to another episode of Real Estate Served on the Rocks, powered by Living in Colorado, The Mile High Perspective on YouTube, Lifestyle International Realty. Do I have to say it this time because he's not here? Nope. Not here. So this episode is not sponsored by them.
Nope. Just LAR, baby.
If you guys are watching the video, you can see Oscar is with us this week. He has an extremely busy week on the real estate side. Happy for him.
Yep.
That he's doing good because he's doing lending and real estate now. And I'll tell you what, today's episode would be a fire.
It would be funny. I feel like he'd be mad,
right?
In one way or another. I don't know why, but I feel like he'd be mad.
So my name is Charlie Sardelli, and as always, I'm here with
Jameson Amros.
And on this podcast,
I like how the mic's not in my face anymore.
I know, right?
It's nice.
It's nice to just have the lobs.
Freedom.
And on this podcast, we talk everything real estate market, real estate trends, things adjacent to real estate. Like, you should check out the channel. We got how to build a cigar and whiskey room in your house.
I think we're going to try and have one coming up about how to build a golf simulator in your house.
Love it.
That'd be a good one.
I love it. But we do all of that while sipping and enjoying bourbon. And we are filming on a day that I know for you carries extreme amount of weight, but everything I literally have accomplished in the last 5 years was because of JC.
Yeah.
And so I'm going to let you take it from there, man.
Yeah, no, I mean, it was, so JC Ortega has been my best friend for, my God, since I was 15. I'm 40 now, so Jesus. We're going way back. Yeah. Passed away 2022. We started the podcast with him in September of 2022. And he was on it. He was the catalyst for it. He was on it for a short time, took a break, came back, have done it ever since. And we shared a love of bourbon, which is where the whole concept came. He brought Charlie on as a production manager. And since then it's, dude, here we are, right? Yeah. And then obviously adjacent to that, the things that we've done with the video production and real estate and social media and everything has been
incredible.
Has just started from that, like, if you look back at like those initial meetings.
Oh, dude, the first recording in Castle Rock.
Yeah.
You and him, I was literally following you with my cell phone.
Yes.
And now I got a cinema camera.
Yeah, with a Galaxy S20 or something like that.
It was ridiculous.
Yeah, it was insane.
But
or
we were
like
doing it.
Or the Office with like.
Yeah, we'll see if we can throw a picture in. Go back to our first episode so you guys can see the difference. And if you guys can tell.
It was wild, dude.
We got our sign.
Yeah, we did get our sign. Yeah.
Lifestyle.
International.
Realty.
We're legit.
Yes.
Legitimized.
And on today's episode, we are going to be drinking a bourbon that was extremely close to JC's heart.
Yep.
I think, didn't we have our first Midnight's Dram with him?
Midwinter Giant Dram? We did.
I think it was episode 2.
Yes.
Yeah.
Yep, we did. I think that was it would have been Act 11 maybe?
Yeah.
Something like that.
10 or 11.
10 or 11. This is Act 13, Scene 8.
Awesome. So Jameson, break it down. I'll pour it out for us, but break it down. Tell us about what we're doing here.
Well, I mean, we've done Midwinter Night's Dram before at the Rouge. And they come out with it yearly. And it is a rye whiskey finished in port barrels. So it's always going to be on the sweeter side. Very, very complex. It's a perfect winter bourbon. It is.
To me, it's wild, and it's always the spice that gets me with these bottles.
Yes, it is always the spice.
And you could definitely tell why it's that holiday style bourbon. So does it say anything about the mash bill?
On this one specifically, no. This just got released. I don't think this one. I got to look at Act 13, Scene 8. Let's see if they have it up.
Okay. And yeah, it's crazy to me too, just to see. If you guys don't know, this one I get it wrong. A Midwinter Night's Dram is produced by High West Distillery, so it's the same company as the bottled and bond straight rye whiskey that we had. Was it 2 episodes ago?
Yep.
So like we said, phenomenal distillery. They are newer in the game, but everything that comes out of that distillery is absolutely incredible. We haven't had one thing from High West yet that has been bad.
No, we haven't.
And again, it's a distillery that's based on science.
Yes.
Like everything that they do is based on the science.
Yep. I'm trying to find the mash bill, but I don't think I've got it.
Okay. It'll be adventurous then.
But I mean, all you got to do is read the description of the nose and the palate, and you realize how complex this bourbon
Don't
is.
tell me it. Don't
right?
tell me
Like,
it. Don't tell me it. All right. So first, before we take JC,
cheers, buddy.
my man. Thank
Happy
you.
birthday.
Happy birthday.
Fitting for the 40th.
Yes.
Yeah,
Absolutely.
We had this the year after he passed away. We went to the Ozarks, and this is the first bottle we cracked at his place in the Ozarks too. So,
And JC was definitely of the mindset when you open a bottle with friends, you either finish it,
yep,
or you don't leave the table.
you don't need to. Yeah, yes, this is very true.
Oh man, the color on it, there's like you could tell it was in a port because it has like this subtle ruby
Yes,
to it that is a beautiful mix of the normal amber and like that red tone of wine, port, that darker. Yeah, I'll tell you what, it's funny because when I smelt it out of the bottle earlier, different than the glass.
yes, very different.
Totally
Yeah,
different
very
than the glass. But what was this again? What was it proof?
100.
100. Yeah, no.
Yep, 99 point.
Maybe we're getting to
Seven.
Yeah, I was gonna say there's no burn there. But I mean, apples, cinnamon, getting the vanilla, but it's more of like a vanilla bean rather than like a
It's
vanilla
not
ice cream.
Yeah, it's
You
not.
know, like
it's
the
not a
sweet
vanilla extract.
Exactly,
No.
exactly. And then it's odd because that oak is 100% giving it like that flat, like dirty. It
It's like a little bit of fig. Fig, cinnamon, vanilla bean. I get the rye. Like I
little
still
bit
get
of
the
citrus.
the bitterness of the rye. I still
yes.
get it.
Oh, absolutely. But it makes sense now because every single one and High West knows it because this one was a straight rye.
Yes.
Right? They know
Yeah.
that if you do a rye or if you have sweet profile, you do a rye.
Yes.
Because the rye just brings you back to that rounded bourbon flavor versus we've had bourbons that are just overly sweet, like
Correct.
crazy.
And they just stay that way. Yep.
Okay, I know you took a sip, but I'm gonna get
Go
my
for
first
it.
sip in.
I just had to. I had to.
No, that wasn't a moment of silence for JC. I was just living with that. For my goodness. Whoa!
It's like
Hold on, dude. Hold on.
It's
Hold on.
it always reminds me, like, anytime I take a sip of this, right? I imagine myself as like a gingerbread man living inside of,
Dude.
You know what I mean? Like, because it's such a contrast.
Hold on. Like the definition of complex. Like I know, and guys, I understand. I know, we like this. Obviously, is the score skewed? No.
No, it's
It's-
not.
When I tell you like the complexity, just the mouthfeel alone. Like I wish. Does it say anything about like filtration or anything like that?
No, not the way that, I mean, they filter it the same way they filter all of their ryes.
Okay.
So
So the mouthfeel on this is insane. It's literal silk.
it is.
Yes. And then like just the evolution of the flavor
Yep.
is insane. At first you get the burn, then you get a little bit of that sweetness, then the oak, then it goes to the back of your palate and you're getting the apple, you're getting the cinnamon, you're getting that sweetness, and then it kind of dies off.
Because remember, it's most of the time, right?
Yeah.
You have these ryes and they're finished in American oak barrels. These are finished in port cask. So you get that plum, that fruit, but you get all that sugar that coats those barrels.
And it's just, but it flows. It's not like here I am, this is what you get. It's like, oh, here's this. And then the next element, and then the next element. Oh, and by the way, the sitting flavor on your tongue is like you just finished a hard candy.
Yes.
It's nuts.
Dude, it's, I mean, there's a reason that every time it comes out,
Yeah,
it's gone.
I'd love to try the balcones in
Yes,
in the agave barrel.
What? No, not the balcones. It was the balcones in the Cataleja.
Yes, yeah.
So there was Cataleja. That was in the port rum barrels.
Okay.
High West was the Casanobles in the
Okay.
agave. If you put those three,
Dude,
yeah.
insane. Oh boy, this is gonna be a good one to drink for today's topic.
So just in your as a follow up of like the complexity, right? So the official palette
okay.
is spiced plum, clove, black currant, caramelized sugar, and then velvet port.
Those are in-depth flavors. Like my palate's not sophisticated enough
Yeah.
to call those out.
Rye spice, dried fruit, gentle oak.
Yep. It's the gentle oak at the end before that hard candy. that kind of just like levels it out. And you're like, oh yeah, it's bourbon.
Yeah.
And then you're out.
And they only make a limited quantity every single year.
Incredible.
Every year.
Incredible.
So good.
Well, today's topic is timely, and I'm gonna have to edit this one and turn it around fast because let me tell you, man. I wish, guys, I really wish, because we always try and stay even keeled here. I really, really wish that I could tell you that this was a pros and cons episode on the 50-year mortgage, but I can't.
Yeah.
I can't.
I think there's a hidden pro, but it's buried. And we'll get to it.
I'm excited to hear it because
We'll
I'm
get
not
to
gonna
it.
lie, I dug.
We'll get to it.
I dug
We'll get
for
to
a
it.
pro
It's
on
not.
this.
It's not obvious.
Yeah.
I will tell you that. It's
Okay.
not an obvious
Okay.
pro,
So
but it's there.
basically, to start out, this week, if you've been paying attention to headlines around real estate, you'll see that the Trump administration showed favor to the addition of a 50-year mortgage option for homeowners on their home loans. And the initial reaction online, at least in our, I hit the mic, in our real estate circle, was not received very well.
Blasphemy.
Yeah, and so I don't even know. I guess we can kind of start with like the benefit, like the one benefit.
I mean, well, I think so. Let's start with this. Why was it even a conversation? Like, what even brought it to light? Why would the administration go with Pulte, ironically enough? And if you guys have ever bought a home, Pulte, and he's head of one of the housing administrations, right? He's in partnership with the Trump administration. Came out and said, "Hey, we're working with the administration and Fannie and Freddie to move forward with 50-year mortgages." So I think we can start out with what was the, I'm going to use this term very loosely, logic behind let's see if this is a good idea.
Do you want me to give you my example and my impression of how this 50-year mortgage?
I'm just saying, like, what was the? But what I'm saying is,
conversation?
what was the pain point as to what caused this conversation to start?
the affordability.
Right. So,
Home
but
affordability.
specifically monthly payments.
Monthly
right?
payments, yes.
That's what
and
caused
interest rates. Obviously, everything that we've been talking about the last
Yes.
2 years, 3 years on this podcast of interest rates are hard, home prices are high, which make monthly payments higher and hard to manage. And we always tell you focus on your monthly payment because at the end of the day, overall price of the home doesn't matter as long as you can manage the monthly payment. So that's kind of where it came from. But James and I'm going to do it for the clip.
Okay.
I'm gonna do it for the rage bait.
Clock it. What's the thing? Clock it?
Yeah. Got to get the snap thing here.
Clock it.
For the 50-year mortgage, this is how I imagine the conversation went in the room.
I don't even think he was in a room.
Home's too high. How fix? Longer time pay. Good. Happy client. Yeah. That's how I picture the conversation. I'm sorry, but it is such a rudimentary and idiotic solution. To a problem.
I think it's short-sighted. Right?
Yes, 100%.
I've used the analogy multiple times in talking to people that it is a Band-Aid for a bullet hole, right? And I think that anytime you have a conversation about affordability with homes, which that has been front and center in the last election, this election, it'll be front and center next midterm election, is affordability, right? You have, we just talked about it, Gen X, Gen Z, millennials, frustrated because you guys can't work a normal job, pay normal bills, and afford a home like everybody told you you could by going to college, getting a job, so on and so forth, right? Like you just can't do it, and it's fucking frustrating, and we understand that. And so that's the conversation. So when that happens and it becomes a talking point from a policy standpoint, then you've got elected officials, not naming anybody specifically, just elected officials, scrambling for solutions. The problem is some of these elected officials make a lot of fucking money and have not had to deal with these specific problems for a very long time because they may own 1, 2, or 700 properties. Right? And have maybe declared bankruptcy 1, 2, or 700 times. And it doesn't compute that just saying, hey, you know what? The problem's affordability. Let's make the payment monthly lower. The way to do that is let's just extend the payment out more. Boom, solution.
Like I said, I'm sorry, but I don't know. It's a simple.
I'm with you. I'm
Band-Aid
with you,
on a bullet
I'm
hole,
with you.
100%. And so I will say, like, if you look, if we had to do a pros and cons list for this, the biggest enhancement to home buying power that this gives anybody would be to make the monthly payment lower.
Significantly?
I think $200 a month?
Depending on the home price,
Depending
but
on the price.
not a ton, right?
But and see, this is where what I don't like about this, in all reality, is that this 50-year mortgage is coming out at a time, like Jameson just said, where you have an entire generation who never really learned about financing. We have the highest amount of credit card debt in the nation's history, and you're just you're polishing a turd. You're literally just presenting them with something that looks good and going, hey, your monthly payment's going to be easier. So this is good. Monthly is going to be easier for you. And I just feel like it's taking advantage of an entire generation that doesn't really understand what a 50-year mortgage compared to a 30-year mortgage would do.
Correct. Yeah, I think you're essentially taking the debt or the problem, whichever we're going to clock it, and you're just kicking it down the road.
Yep.
Right? So we're just going to play this out, right? So
here, hold on. Okay. So we talked about the pro, right? It's going to bring monthly payments down.
Well, no, I'm going to give you what it's going to, like, what that looks like.
Okay.
Median home price in Denver, Colorado is $585, roughly, right? So at 20% down, which again, that's not even realistic because most people do. I think we'll do the average. I think the average is 10, 10% down. So at 10% down, on average, with mortgage insurance, property tax, homeowners insurance, you're looking roughly $3,700 a month on a 30-year, okay? And we'll talk about this caveat. But I'm going to assume all things remain equal on a 50-year mortgage, okay? The new hotness. If you guys watch Saturday Night Live, Bill Hader's character, the hottest club in New York City is the new hotness. So let's go 50. You went from $3,744 to $33.58.
$400-something.
So $400 a month. That's what you did.
Yep. Now, granted, $400 a month is significant. That will help people, 100%.
Sure.
But now, this leads us right in to the landslide of cons for the 50-year mortgage. So there's I guess let's break it down. There's 3 major cons.
Okay.
Right? So first major con is going to be your principal and equity growth over the 50 years.
Okay.
The second major con is going to be the amount of interest you accrue over the amount of time of your loan, the total interest. And the third con is, hold on, I had it, it's going. 1 second, third con. We'll get back to it. So let's go over the first con. So the first con that we're talking about is principal, you're at the equity in your home, right? So how mortgages work. There's 2 parts to your mortgage when you make a payment. There's your principal and there's your interest. And so when you make a payment, some of your payment goes towards principal, some of your payment goes towards interest. And over time, what ends up happening is as you pay that off, your principal starts going down. Your interest is going to stay the same, but your principal, your overall loan amount is going down while your home price is staying up here. So now what's happening is as your principal goes down, you're gaining equity. You're gaining worth and value in your home. So when you turn to sell it, you can then make money on your home. But the only reason that you're able to do that is because your payments over that 30-year period incrementally knock off that principal at a really good rate.
And the reason that is if you guys have ever bought a home, they give you something called an amortization schedule. And you got to remember, the banks are loaning you the money to buy a property, right? They know, for the most part.
Con number 3 is qualifications.
They know, for the most part, you are not going to hold on to that loan for 30 years. Banks don't make money on you paying off your principal. They make money.
Repeat that.
Banks don't make money on you paying off your principal. They make money on the interest. So what they do, and if you ever look at an amortization schedule, we can put up a graph if it makes sense. I've done a couple on social media. The way your scheduled payment runs out. So if your payment, let's say in this scenario, was what I just say, $3,400 a month, right? For the first chunk of your loan, years, the majority of your payment goes towards interest. the minority goes towards paying down the principal. So in a 30-year mortgage, you start paying off your principal faster because the time frame shrunk. In a 50-year mortgage, you're not paying off your principal for much longer. So that's where you're not building the equity. So if you want a specific example of what that actually looks like, right, just to give you guys an idea, if you have, excuse me, an average home in the U.S., right, after 10 years, right, and I think the average home is called 480, something like that. After 10 years on a 30-year mortgage, you pay about 16% of your equity off in your payments. That equates to about $52,000 in principal in 10 years. And a 50-year mortgage, you only pay 6% of your equity, which is $20,000 in principal.
I'm really trying to figure out a way to make this, because I feel like the second we start talking mortgages, we start talking interest rates, stuff like that.
You lose $32,000 in equity by doing a 50-year mortgage over a 30-year mortgage in the first 10 years that you own that home. That's it.
You lose
$32,000 in equity.
I'm trying to think of a way. Like I need apples. I need like something to show them, because I feel like we lose people when we start getting into these higher levels.
I don't know. I mean, think about it this way, right? Like, let's say a house appreciates 3% per year, and I'm only paying off in 10 years. I'm paying off 6% for the house.
So perfect example. So let me kind of walk you guys through. I did this before I came in. I looked at what a $600,000 home would look like on a 50-year mortgage.
I drink this bourbon, but every time I drink some of it, somebody pours more into it. And then by the time I've drank this bourbon for 10 years,
it's full.
It's full.
And you can enjoy the whole bottle.
Exactly.
That was good on the spot. That was real good. So where was I going? ADHD, you got me, Joe.
On the way here, you were doing something.
So a $600,000 home, okay? If you have a $600,000 home on a 50-year mortgage, on average, with interest, over that 50 years, when you bought the house, it was $600,000. But with interest over 50 years, that house is going to be worth, quote unquote worth, zoom in on the quotation marks, worth $1.5 million. That's sorry. You're going to pay $1.5 million with the interest. So let me clarify again. I apologize, guys. So if you have a $600,000 home and you take out a 50-year mortgage, by the end of the time that you're done paying off that 50-year mortgage, the amount of interest that you have paid on that loan will have taken you from $600,000 to $1.5 million for the same property. Now, in order for that property to appreciate to a value that would benefit you to where you could sell it, that home would have to go up on average 5 to 7% year over year, no lower. And the national average, the high national average over the last decade is 3%. Like it just doesn't. But again, if I didn't get into real estate, I never would have noticed it. I never would have thought about it like that, right?
No, it looks like it's like if you guys ever had credit cards, right?
Yeah.
So I had a credit card at one point where my interest payment on the credit card was $227 a month. My interest payment. My minimum payment on the credit card was $207 a month.
Yep.
So I was paying $207 a month to pay off this credit card, just to pay it off. But then I was being charged $227 a month in interest.
Can I connect our past and give a really good example?
Sure.
The Best Buy credit card. They get you in the door with zero interest financing. You're not paying anything extra monthly, and it's not gonna cost you any extra for up to 24 months. That's 2 years. You don't have to pay interest on this loan at an interest rate that's normally 22%, right? Okay, but after those 2 years, if you don't pay off the entirety of that product, then we're gonna charge you all of that interest from the 2 years, all at once, right? And I say it like that because if you go on bestbuy.com, on your credit card, I have one, it will tell you a minimum balance that you have to pay just so they don't knock your credit. And guess what? If you pay that minimum balance, you're not going to be paid off within 2 years. And then you're going to accrue that interest. And that's kind of the rigmarole, the runaround that I feel like this 50-year mortgage is doing.
Yes.
Hey, everybody, you want a house. Let me get you a house. It's going to be you're gonna be paying on it for 50 years, and you're probably not really gonna gain any equity, right? But it's gonna be easier for you. You're gonna own this house, and you know what? I appreciate you so much that I'm gonna let you do this over 50 years, but it's gonna hurt you. Like that's how it looks, and that's why the second con is that the interest,
right,
is because the longer your loan goes, the more money the banks make. And I'm sorry, I know you tried to steer around it, but the Trump administration has done nothing but prove to us that they're lining the pockets of millionaires and billionaires, and this is nothing past that. Because at the end of the day, the consumer may be able to buy a house, that's cool, but the banks and the people who are already billionaires are the ones that are gonna make out with more money in the future. And that pisses me off.
And again, the reason that's the case is because with the amortization schedule we talked about, the way mortgages are set up, you're paying the interest up front on a loan for your mortgage, right? So if the bank gives you a 30-year, the bank gives you a 50-year, it doesn't matter. The way that schedule's made, if you hold that loan for 3 years, 5 years, 30 years, 50 years, the bank's making the interest up front.
Yep.
That's how it's structured.
So
they're going to make their money regardless at the
matter.
expense of you building equity and wealth in a property that you are paying on time monthly with the paycheck that you're working your ass off for.
with a hope that it's going to appreciate at 5% or more year over year, and we're not going to have another pandemic. We're not going to have another housing crisis.
I'll say the last 2 years, I think this year we're going to be flat. Last year we were 1.2%.
1.2.
So all it's going to take is 3 bad years of just flat.
And you lose.
You're upside down.
Done.
And that's what happened in, what was that year? 2007? 8? Weird.
People, when loans almost doubled because their amortization schedule went.
It's crazy. Crazy.
Sounds
like
we
history.
don't learn from
History repeats.
Yeah.
No, history doesn't repeat it. History never repeats itself.
And we'll have
right?
okay. So and here's some conversations.
Don't we have books that we read to learn about this shit?
If only.
Fuck.
I want to head off this conversation like real early. I had this conversation earlier today, and they're saying, well, most homeowners only own their house for 5 to 7 years at this point. So basically, all you're going to do is this is a great opportunity for people to get in and buy a house at a lower monthly rate until it's good, and then they could refi into a 30-year or a 15-year. And it's just I'm sorry, but I don't see the benefit of the short-term gain for the long-term hurt, long-term pain.
Well, there's 2 problems with it, right? So the first problem is if the goal is you get in early, okay? So we just said in the scenario, $585,000 house, you get in, your monthly payment's $400 less, right? Okay. So you're in that for, I don't know, however long, then you refinance into a 30-year. So let's say you're in it for 5 years. Number one, you have to hope that your house appraises at a value that you can refinance, number one, right? Number two, you're gonna have to pay a cost to refinance, which is usually 1% of the loan. So that could be a couple $1,000s, in which case some of the money you saved monthly is gonna get eaten up. Thirdly, if you're at $3,400 and then you're refinancing into a shorter term loan, Charlie, what happens to your monthly payment?
It's gonna go up.
It goes up. So, okay, congratulations. So you just took on extra interest payments to get into a home at a lower monthly payment to then turn around, spend a couple $1,000 to refinance into a shorter term 30-year at a higher monthly cost. So what is that benefit? What's the benefit?
I don't see nothing.
I mean, hopefully you got a job, you got a promotion, you got married, you have got fucking roommates, your kids moved out, your kids moved in, started paying. Like, there's so much that has to go right for that to make sense. The second thing that's wrong with this that nobody's really talking about, because number one, a 50-year mortgage isn't even allowed under Fannie and Freddie in general, right? Like, it's not even, the regulations forbid it anyway. But there's a reason. If I have a 30-year mortgage, guys, I have a certain interest payment, right? If I finance it into a 15-year mortgage, so a shorter term, I get a better interest rate. So shorter term, better interest rate. Longer term, worse interest rate. So following that very hard to learn logic piece, if I go from 30 to 50, that's a longer term loan.
And this is where it gets us to con number 3.
Which would mean the interest rate would be higher.
Yep. But the reason I say this brings us to con number 3 is qualifications for these loans. And the reason that it brings us into this is exactly what you said before. Guys, the banks aren't here to give you loans because they're kind. They're not loaning you money because they want you to buy a house. They honestly don't give a shit about you. You're a number in their book when you take out a loan, right? And what have we said from day one of this podcast? Economy bad, real estate good. And we have had examples of this in the past. We have had 40-year mortgages. So we had 15, 30, and that's something that Trump mentioned. Oh, it's only a natural progression to go from 30 to 40 to 50. But to your point of banks make money on this, and what you're talking about with the interest rate. Okay. You're a bank, and your friend comes up to you and says, hey, I need $10,000 from you, but it's going to take me 15 to 20 years to pay it off. Are you more prone to give your friend $10,000? Or, hey, I need $10,000, but I'll pay you off next month. Which one sounds better, right? So the reason I bring that up is because the longer your term goes, the more risk the bank is taking that something happens and they don't get that money that they fronted for you. So from a 30-year to a 40 to a 50, you're going to see a higher interest rate because the banks have more skin in the game. They have more to lose over a longer period of time because what if something happens? What if you pass away? They're not getting that money.
Well, not only that, let's take it a step farther, right?
Okay.
So if I go to get a car loan, okay, and I have a certain credit score, and I've got certain terms, or I go to a lease and I've got a 48-month, a 24-month, a 12-month, 84-month.
Yeah.
Well, no, what I'm saying is the reason that it's riskier for the banks is because by and large, with their risk portfolio, anyone that wants to spread a payment out over a longer period of time for a smaller payment does not normally have a great track record of making those payments on time, which makes the portfolio riskier for the bank, which means you're going to have less qualified people going for that loan, which means the bank is going to charge you a higher interest rate, which means all of the things that we've seen on social media saying a 50-year versus a 30-year, everybody is comparing it with if all things are equal. These are not equal. This $400 a month savings that people are saying you're going to get by going 50-year versus 30-year, I think is bullshit once the banks run the numbers.
Yep.
I think it's going to be $150 a month savings because you're going to get a 6.5 interest rate, let's say, on a 30-year. You're going to be at a 7.5 on a 50-year.
What are new construction loans? It's the same thing, same
Right.
premise, right? And so, and this brings us.
But nobody's talking about that because they're just like, ooh, shiny objects.
Yeah, lower monthly.
Right.
But and they're counting on that, guys. Please, they're counting on you to think like that so they could take advantage of you over 50 years. But again, if you can't tell, I feel a certain way about it. Anyway, the reason I say that qualifications come into play because whenever you take out a loan, 15-year, 30-year, this is why I wish Oscar was here on this episode, you have to qualify to actually get that loan. And in my mind, I'm sitting back going, why are we doing this 50-year mortgage in the first place? Because why? Why are we doing it?
Like,
yeah,
logically?
Why is a 50-year mortgage? Why?
Because of affordability.
Affordability, right? We want people to be able to afford their monthly payment.
Their monthly payment.
Okay.
Yes.
So it's an affordability issue where most Americans can't afford to buy a house. So what that tells me is those same Americans probably wouldn't be able to qualify for a 50-year mortgage. Why? Because let's talk about historically. I mentioned the 40-year mortgage earlier. If you look at the 40-year mortgage, no major bank was offering that option. Wells Fargo, Citi, whoever you want to, no major bank offered it because they understand the risk, right? So already you took this opportunity and shortened it to here, right? But with the 40-year, now let's say, or with the 50-year, now let's say they go, hey, so in order to qualify for a 50-year mortgage, you have to have at least a 725 credit score. Okay, cool. Have the most credit debt in United States history. Said that again. And in order to qualify for this loan, your debt to income ratio can't be below this. Oh, but wait, what did I just say? The highest amount of debt in American history, but we still need cars. We still need to
Average car
rent.
payment went to $517 a month.
Right. Okay. So wouldn't be able to qualify there either because your credit score is probably lower because you've taken out a bunch of loans and used your credit to then survive in the ecosystem that it's causing the need for the 50-year mortgage. But hold on.
Oh, well, hey, Charlie, how about this? Okay, you know what? That's fine. Then all I require is you have whatever your monthly payment's going to be. I just need you to have that in 12 months of reserves.
Oh, so you're telling me I need to have close to $50,000 just sitting in my savings.
If you have that in reserves for 12 months, so if it's a $4,000 mortgage, I just need you over 12 months. I need you to have about $48,000 in reserves, and you can qualify.
Oh, so wait. So before I even qualify for this 50-year mortgage that brings my monthly payment down to a price that I can afford for the house, I have to have almost $50,000 in savings, and the average American right now has less than what, Jameson?
$1,000.
$1,000 in savings. How does this make sense? You see, like it just doesn't. Again, it just seems.
Did you ever watch
house is too expensive? Make payment lower. People happy. It's so asinine.
Did you ever watch? Was it Johnny Five, the robot with the wheels?
No,
man, it's a great movie. Anyway, he's a robot. And he has feelings, and he gets overwhelmed by his feelings, and he just spins out and starts smoking.
What it's like to be autistic and have ADHD.
Yeah, he's just he just explodes.
There's been moments where I stare at a wall.
Absolutely explodes. The problem is people don't understand that the root cause is the economy. Like that's what it is. And until we address that portion of it, anything having to do with affordability from the home standpoint, with interest rates and mortgage rates and so on and so forth, nothing's going to happen, right? The reason that homes aren't affordable are threefold. Sorry, there's three pillars. We talked about this multiple times. The first pillar, wages. Second pillar, interest rates. Third pillar, home prices. For homes to become affordable, one of these three things has to change. So either wages have to increase above and beyond inflation significantly. Home prices have to come down, which will only happen if inventory significantly increases, or interest rates have to come down in conjunction with inventory going up. Because otherwise, if they come down too much and we don't have enough inventory, then it doesn't matter, right? So right now, if you look at it really, the only one that is going to operate independently is wage growth.
Yep.
Right? So then the other two, between interest rates and inventory, you would have to work on those as a federal government in conjunction with each other. You have to get people to believe in the dollar again and buy bonds so that those rates come down. And you have to get rid of the red tape so we can build more houses faster for more people.
And
those are the two fucking solutions right there.
What's happening in May, Jameson? Do you know what's happening in May with the Federal Reserve?
An election. Jerome Powell goes.
Jerome Powell's leaving. And there's a gentleman that's going in that has already said that he's going to cut rates.
But again, those rates don't even matter.
But hold on. But again, he goes in. Those rates don't matter at first. But if he cuts those rates, what happens to inflation? Inflation goes up. And if inflation goes up, what happens to mortgage rates? They go up, right? And so that, again, it's just, there are too many factors going on right now in order for such a Band-Aid of
Correct.
a fix.
Yes.
And it's, to me, in all reality, like if I'm being honest, and again, we're not a political show, but unfortunately, real estate is tied in with the economy. And the economy has become very tied in with politics.
I think it's become so tied in. Like we have become, and I think housing's always been the litmus test, right? Like just in general. Anytime you look at recessions, the housing market has always been the lagging indicator of the recession, but then the leading indicator of the recovery, right? But housing has never been more unaffordable up until these last 5 years. So I think this is the first time in history that housing has been the thing, if you take into account property taxes, insurance costs, and then just overall housing costs in general, where all of a sudden people were like, holy shit, like the roof over my head is getting to a point where I cannot afford to live here.
And what does that lead people to? Renting. Right?
And even that.
But what the reason
I was saying it's leading to dissent and anger and frustration.
100%. But people are now. I know I am.
Yeah.
I'm renting, right? And I'm extremely lucky that Alicia, my wife, is a leasing agent, and we get a discount on our rent.
Right.
Right? But you have now, and shout out to Colin Keenan, you called it, you're renting from the bank. With a 50-year mortgage, you're renting from the bank. And ultimately, all you're going to do with a 50-year mortgage is when you have an apartment listed next to a home with monthly payments, somebody's going to go, oh, the apartment's only $200 less than this 50-year mortgage monthly payment. I'm going to do that. I'm going to do that. And you're renting. You're doing the same exact thing.
Yep.
And so it's for me, I don't know, man. I think it's evident that last week's elections did what they did, right?
Yes,
Right?
I agree.
What we saw.
The people spoke,
Right.
Especially considering how poorly, again, not political, but how poorly the Democratic turnout was
Republican.
No.
What do you mean?
No, how poorly the Democratic voter turnout was.
Oh, in comparison.
In the general election.
Yes.
And then all of a sudden,
Boom.
It was like, oh shit, we actually, we got to wake up.
Yep.
So I think that was telling, right? And people are frustrated. And I do believe that like there's always a natural balance.
I don't know. All I'm saying
The
is
problem is we're on the roller coaster.
dude, all I'm saying is,
And I feel like
there's no coincidence.
The harness is unlocked.
Well, there's no coincidence that they had a horrible election and then 3 days later, hey, we're coming out with a 50-year mortgage.
No, dude, I get it.
Like it's just like it's all smoke and mirrors, bro.
And 50-year mortgage, Epstein emails, fucking portable mortgage, whatever. Like it's just.
And it sucks because I genuinely believe the best way for people to understand and digest real estate is your monthly payment.
Yeah.
And I hate that we're now in a situation where that's become dangerous.
Yes.
And I have to have that conversation of, hey, yes, worry about your monthly payment, but don't just go for the cheapest option. Please talk to me about it. Talk with your lender about it. Let's see if this is worth it for you. Let's see if this is something that is valuable. In a state like Colorado, average home price of $585 with hopefully a growth of 1 to 3%, maybe it might be good for some people.
Yeah.
But in places like Kentucky, Mississippi, Louisiana, this isn't going to do anything. Nothing.
No, I agree.
And I guarantee you, I'm interested to see what the home price is going to be, because I'm sorry, but they're not going to write for the qualification. I guarantee they're not going to write a 50-year mortgage on a $350,000 property.
Well, that's what I'm saying. Like the entire crux of this entire like headline is hilarious because, again, it's not in any guidelines. So they still have to figure that whole out, and the banks are going to sit there and go, like, I get that you guys want to do this, but we don't want to. Like, I don't think the banks want to lend.
No.
On a 50-year.
Especially not when they just took out the most amount that they ever have from the reserve of $50 billion.
Right. So I think there's a liquidity issue. There's a whole bunch of other things. So there's a lot of like steps for this to even be a thing. And to your point, with the 40-year mortgage, it has always been a mortgage of last resort type of thing for a reason. So the fact that that's a mortgage of last resort and then we're going to just go straight to the 50 years like an option for everybody it's scary how out of touch it is, but I also think like people are panicking because nobody has a good answer.
No, dude, it's not, and that's the thing. It's not out of touch. It's taking advantage.
No, but I also think it's out of touch. I think
really,
yes.
I think you're giving them too much credit.
Politically, I think it's out of touch because there's a panic going. There is a vast majority of the United States that is frustrated with the affordability crisis that's happening. We need to come up with a solution, but the real solution is so messy because it involves. And I don't mean to get too deep into this, but it involves the U.S. dollar and how the economy is viewed throughout the world. And that is a problem because it is in direct conflict with the isolationist policies of this administration. And you cannot rectify those two. You cannot strengthen the U.S. dollar with having an isolationist policy. And that's the problem because the only thing that brings people back to buying bonds, and I'm sorry to go deep into this, but if people buy our bonds, they're more valuable, therefore the bonds don't have to charge as much interest rate. As the bond interest goes down, mortgage rates goes down. That's the 30,000-foot view, right? People don't trust the U.S. dollar because we are putting ourselves in this, we're on our own fucking island, we don't need anybody else, so everybody else is going, then we don't need your fucking bonds. But that's the policy. And in order to make this housing affordability thing, and because bonds are driven by that, you can't have those two policies they don't mesh. But instead of attacking that and saying, okay, well, maybe we can't. So now it's like, well, how about we just 100-year mortgages? I don't know.
I mean, shit, bro.
Why
From the
not,
time
dog?
you're out the womb, just create an account.
Trust.
Yeah,
Everybody gets a trust.
Everybody,
Everybody gets a trust house.
what about
trust.
the Trump $1,000? I haven't heard anything about that for the newborn baby.
$2,000 for that. $2,000
baby,
for the tariffs that we already paid in goods.
Yeah,
that we get back
you're
to.
Right, you're right.
Yeah.
Sorry. Anyway,
Yeah.
I think this is a great time to move into our one rock takeaway.
You're really like the Broncos and the Nuggets games, like follow the
It's
ball.
the moving
Which one?
It's it's legitimately the whole point of
And
that
then
magic trick.
you and I are sitting there like, it's 2.
It's just
fucking
it's right
2.
there. It's always 2.
It's always 2, guys. It's literally 2. I see it.
It's right there.
It's
I've
2,
been to 5
guys.
games.
And
this
then they're
season.
like 3, and we're like,
it's
2. And then they go, it was 2. We're like, we know it was 2.
So let's go ahead and move into our one rock takeaway.
Well, no,
for
one
today's
thing I will
episode.
say.
Oh, no, wait.
I
The
told
hidden
you,
positive.
the hidden positive.
Yes.
The hidden pro of this entire conversation, I think, is the fervor that it has caused and the conversations it is starting around housing in general. Because you and I have talked about education is the most important thing. And I have
love that
gotten...
your positive is a philosophical positive.
I mean, you guys
all we
grasping
do.
for straws, bro.
It's
I
all we
don't
do.
know what else I can do,
I
right?
was sitting here like you were gonna pull out some back
Oh
level
fuck
lending
no,
shit. I
this
was
is
like,
no. We're talking. No, this is.
Jameson's running on vibes. Everybody.
Yeah, I'm running on vibes, dog. This is not. We're not going facts. Like this isn't like a policy thing that I found. No, this is. This is philosophical. I've gotten more questions, comments about this from clients, friends, family, so on and so forth, and to me, it just means that people are paying attention.
Yeah.
So as rudimentary of a solution as it is, and as ludicrous to us in the industry as it is, it's starting the conversation, which I hope will mean that more people are truly starting to understand that the system was not built for them. And they're going to start questioning, why is it built this way? And they're going to start researching on their own, and they're going to start educating themselves, and they're going to start making smart financial and real estate decisions. And then maybe they're actually going to listen to us as we speak on these couches and are holding the signs going, hey, guys, like,
Check it out.
we've been here. We've been saying this for a while. Right. So but I think that like if you look at it, even like normally like when the memes start coming out and it's like from stupid meme accounts, they're like, this is dumb.
Yeah.
And I'm like, oh, I actually agree with Meme Lord 275 and he thinks this is stupid. Now we're actually getting somewhere. So I do think that like as things are coming out philosophically, I'm hoping there's like an awakening that's happening with just how stupid this is getting.
Yeah.
So
Yeah.
that's my...
No, I love it. And
Yeah.
it leads
Yeah.
perfectly into my one rock takeaway for today's episode. And my one rock takeaway for today's episode is please, please, please educate yourselves on financing. I don't care if that's credit card financing. I don't care if that's a mortgage financing. I don't care if that's you borrowed $50 from your best friend last week and you're going to pay him back. YouTube is a phenomenal tool. We're in a period of human history where we have the most knowledge available to us that we've ever had. Please reach out to us, send us a message, send me a text message, a DM on Instagram, whatever it is. If you have a question, I'm more than happy to help you, but please research and learn this because take it from me, and I've said it multiple times, I'll see if I can throw a picture up. I was a long-haired, 300-pound hippie that was okay with living in a van down by the side of the river.
Here's literally Chris Farley,
Literally.
just with a beard. It was very strange.
It has only been 3 years since I've had my real estate license, and I took the time to actually learn and understand finances and the economy and the S&P index and all these other things. And it has given me an outlook that I never could have gotten otherwise. So just please do everything that you can to educate yourselves because when these shiny headlines come out that say your monthly payment is going to be better because of this 50-year mortgage, I need you to be able to turn around and go, yeah, but what about my interest? So that's my one rock takeaway.
My one rock takeaway is I wake up every day and I read headlines and I wonder what the fuck I'm doing in this industry still. And then I have a client, like my client that I'm closing tomorrow, who's a first-time home buyer, who's getting into a property that I helped walk through from start to finish. educated him on the entire journey, and he's walking into a place with equity, understands he's got to put some work into it, was realistic in expectations.
And how long did this whole process take you?
I started talking to him about 3 months ago.
The only reason I bring that up, guys, is because, to my point, it only takes 3 months.
Yeah, 3 months.
With proper preparation, proper knowledge.
3 months ago, and he's going to walk into a beautiful place, first-time home buyer, starter home. He's already got plans to improve it, put sweat equity into it, add value to it. We were able to walk through the inspection, get a new roof, get a radon system, get a new heat exchange in the furnace. Like basically almost $15,000 in improvements in the property before he even moved in. And he's going to close. We have his rate bought down permanently.
Hell yeah.
On a 30-year to 6% to get him to his monthly payment that he was dead set on, because that's what his budget was, and we stayed within those guidelines. And it was a team effort between myself, my client, my lender, to get him to where he wanted to be in the house he wanted to be. We offered on a couple different places that didn't work out for a reason. And I get to go to closing tomorrow and celebrate with him. And I go, despite all the headlines, the bullshit and whatever, that's why I wake up every day and I do what I do. And then I get to come here with Charlie, with you, and educate as much as possible, because that is our job, right? Like I look at myself, I look at Charlie, and the reason we do this is to educate. Whether
Real estate advisor.
Whether we're talking to one person or 100 people, like that's, to me, like that's where I feel like as we read these headlines, and I'm like, oh my God, dude, all we've been getting is slapped around for the last 5 years.
Wonderful time to get your real estate license.
But at the end of the day, like I look at it and I go, there's just not enough people educating everybody else about what this world is. And if they are, they're not doing it well. So to me, that's my calling, is to just
help.
teach.
Please, knowledge is power. There's a reason.
Right.
There's a reason why that's a quote. It's true.
So that's why when I wake up, I'm like, what? Why the fuck? And then I'm like, you know what? That's why.
All right, let's go ahead and move into the bourbon review. Dude, I'll be honest with you. Are you still on first pour, or did you second pour?
No, first.
You're still on first?
Yep.
Can I nose yours?
Yeah.
I did a no. Then I did a second.
Yeah,
I
that's how
topped
good.
it.
That's how good
I
it
topped
is.
it.
That's how good it is.
Okay. Okay. Our noses are pretty similar. JC. And if you guys don't know, I'm going to go ahead and reiterate it. You guys see, whether there's 3 of us on the podcast or 2 of us, there is always a glass that sits on this table, and that is JC's pour. It is here all the time, and it acts as our control, so we can see what a glass is like fully open after the podcast without any twirling, without any touching, movement, anything like that. Gives us a great control.
And just so you guys know as well, when barrels age, I know, right?
Whoa.
I know. I think because it's heavy, it sinks back into the glass.
I'm not gonna lie, I can't, for me, I expected JC's glass to be a lot sweeter on the nose.
It's not.
No. I expected this to open up.
I still get the rye. Even on this, on my first pour, I still get the rye.
What I was gonna say, ours are pretty similar, but JC's, for me, it's the barrel. If you stick your nose in, it's the barrel that's coming through more than anything. Versus at the start, it was the sweetness, like the apple kind of sweet. I don't know, dude. I don't know. I gotta taste JC's now. This one, I'm not gonna lie, it's hard for me because the sit on your palate, at least for my glass, extremely sweet. Like after you're done.
Oh yeah. And that's what I mean. It's built to be that. But yeah.
So JC's 100% kept the sweetness on the mouth, kept that a little bit more of the oak on the nose. Mine went full spice. Like 100% that clove came out.
Yeah,
all
the
of
close
that.
out. I still have, I've got the clove on the front. I still have the vanilla on the back. So I still have the evolution from the front of the tongue to the back of the tongue. Like it still hits all 3 taste bud zones, I guess you could say.
Zones.
Zones. The zones.
Plum comes out. The tartness of the plum in this is right at the front. Then again, sweet, but I don't. If you guys haven't looked at a flavor map of the tongue, it's actually really, really cool.
Yeah, once you know where things are supposed to hit, if they don't hit there, you go, oh, it doesn't have
It
it.
doesn't have it. It's not complex, and it's so crazy because now and it makes so much sense because it's like as it dies off, the flavor goes to the outside of your tongue, which is going to be more bitter.
Yep.
It's a little bit more stationary of a
You
flavor.
got the tart in the front, you got the sweetness in the back.
Wild. I love it. But again, it just goes to like so I don't drink a lot. Like I don't have any bottles at home that I pour out when I'm sipping at home or anything like that. But that is
my
why
bottles are here.
Yeah, that is why I have loved this experience in general because I'm drinking once a week, but I'm focusing on it.
Yes.
I'm recognizing the evolution of them and the different batches and what they're doing. And High West never misses, dude. They never miss.
No.
All right, so drop it. What is, obviously, there's a lot that goes into bourbon. But one thing that we like to talk about is the price of the bottle. Because obviously, we just talked about monthly payments. Price is an important thing, but it's also the experience of the bottle, right? So, Jameson, what are we looking at here? And don't forget, guys, this is like a special release that High West does.
They release it once a year in November for about a month and a half. Once it's gone, it's gone. Pricing of it is the difference between
a
30-year mortgage at 6.5% and a 50-year mortgage at 7.5%. So about $150.
I love it.
Yep.
I love it. That's
It
great.
was $159.
Now, I will say that for me, I think that the regular High West bottles, they do a great job of an everyday sipper.
So this and this are the same price.
Really?
Yes.
Huh. I would choose this over the Taylor.
Right?
Yeah. Just because of the like the Taylor is bourbon.
Yes.
Like it is bourbon flavoring.
Bourbon. Yes.
This is complexity realized, I guess. Like
Yeah.
100%. And for me, what I was going to say
I
is
want
like
to go out to Park City and visit this fucking distillery. We have a connection. My sister-in-law lives out there.
you guys want to see that? You guys want a travel vlog going to the distillery?
We'll go drive it. Dude, it's only 9 hours.
I'm down. I'm 100%. Maybe that's episode 100.
That would be fun.
That would be dope.
Yeah.
All right. Maybe,
Just load up.
let us know what you guys think. But what I was going to say is High West for me, 100% like any of their standard bottles. Yeah, I'll have that on my dresser and ready for people to come over, pass it out.
Yep.
Anything, midwinter night's dram, midsummer night's dram, like this is the one where it's an occasion.
Yes.
I have friends over and
This is why I got it.
Yes.
It was JC's birthday. So I was like, you know what? Every year, this comes out around his birthday.
I love it.
So it's like, this is the bottle. That
Incredible.
I go, you know what? We're going to come
Incredible.
out of the fire pit. Like this is one of those bottles that you just, and it's one too, like, because a lot of times I'll spend money on a bottle, like an E.H. Taylor, right? And I'm like, man, I don't want to finish it because I spent a lot of money on it.
Yeah.
But this is one where I'm like, you know, if I'm around a
If
good
you
group
got a
and we're
good
like,
group of people.
we're just kind of talking memories and so on and so forth, I would not have a problem, and JC would not have a problem of being like, yeah, dude, we fucking finished the bottle.
Yeah.
Like,
All
Elephant, what
right.
do you think?
Yeah. Feel good elephant. How you feeling?
Yeah.
All right. So as far as rating go, if you guys are new to the podcast, if you're just listening or watching, our rating for the bourbon is a rock rating. And that rating is on a scale of 1 to 10. Closer to 1, the better the bourbon. Closer to 10, the worse, because the more rocks, ice you put in a bourbon, usually the worse it is. So the lower the
Caveat
number,
though, if you put just enough, it actually opens the bourbon up.
it does. But if we're talking that, get you a water dropper. You don't need ice.
I still want to do the frother.
That would be on this would be crazy.
No.
I got it at home. I'll bring it.
Yeah.
I'll bring it. That'll be a separate little video
Yes.
that we do for it. Okay, got it. Oh man, hold on, Jamie. I'm gonna leave it to you because I want to give it a true rating for you guys. I want to sit with it for a second. I'm not gonna lie to you. That first sip was an experience. Like for me, it's always like I know they say the what is it, Devil's Cut, the first.
So that's what I was gonna say. There's the Devil's Cut, and then there's the
Angel's Envy.
Angel's Cut. There's two.
Yes. Well, Angel's Envy and then Devil's Cut.
Yes. The Devil's Cut is what gets absorbed into the barrel. Angel's Envy is what gets evaporated. Yep.
And so the first sip on this for me, like, it was an experience in itself.
Yeah.
And what I mean by that is just the second that I took the sip, the mouthfeel, how light and silky it was, the complexity of the flavor on the first sip, not the second, because if you're a bourbon drinker, you know the first one's just straight fire. You don't really get a lot. You have to take that second one to get through it. The first one showed itself 100%, and then the second one just let me enjoy the flavors a little bit more. Yeah, take it. I'm gonna sip.
I mean, I'm gonna go 1.45. To me, it's still, it's a bourbon, but it's not your typical rye bourbon, but it still maintains.
Okay, yeah, you reminded me that this is a rye.
Yeah,
This is a rye heavy bourbon.
It's a rye heavy bourbon, but it maintains the characteristics, but it's not your typical rye, and I think that's why I like it so much, because High West knows it, and the reason they bring this out, because they go rye heavy. And they go, you know what? We're going to tilt it on its fucking head once a year. And we're going to go, nope.
I don't have my tablet this week. I apologize, everybody.
I rated this a 1.75.
Yeah, and I think, I'm going to go a little bit higher.
Yeah.
I think I'm going to go 1.6 on it, only because it does lean sweet. Again, that's the point of it. I understand it. And I love the evolution overall, like the sipping experience of the flavors. But I do want a little bit more of the wood.
Yeah.
Like I want a little bit less of the fruit, a little bit more of the port barrel to come through, if that makes sense.
Nope, I totally get it.
But since it's a port barrel, does that...
And that's right.
It's hard to...
Because I think if you don't finish it in a port, I think you lose a lot of the characteristics
Yeah,
of it.
100%. 100%. Yeah, because the rye would be way too bitter.
Right.
And then you'd lose,
So it's
you'd
tough,
lose that plum
right?
sweet. That's really hard.
Yeah.
But, okay, 1.45, 1.6. If you guys have any recommendations for bourbons to try, if you want to reach out to us at any point in time, we all have our own socials. You can reach out to me at Charlie Sardelli or at Beat the Jeans Productions if you want anything podcast or video production-wise. Jameson?
The Colorado real estate guy, Jameson Amoros on everything else.
You could find Oscar at Oscar the Realtor or OscarTheRealtor.com. Shoot him a text. Or if you want to have a bourbon with us, meet us for an event, a bourbon tasting, or give us an idea for something to do for the 100th episode, you can reach out to us at any time, RESOTR at themilehighperspective.com, or shoot us a text or a phone call.
720-584-3361.
On that note, happy birthday, JC. Thank you for starting something absolutely incredible and changing lives. Appreciate you.
Cheers.
Cheers.